There is a lot of speculation out there about an engineered recession underway. So, today I'm going to spend a few minutes putting my finance and economic hats on. It's been a while, but given the circumstances, I think this will be the most valuable content I can make, and I will, of course, land the plane sharing what it all means for Tesla stock. I've just seen a lot of crazy takes over the weekend, getting a lot of traction, and I'd like to try to set the record straight and provide some expectations for what's going on and what could be ahead. Before I dive in, just remember Trump can remove these tariffs at any moment. Quantitative tightening is likely to wrap up this summer. Without these tariffs, inflation fears would come down, rates could keep coming down as well, and we could be off to the races by the end of this year. I'm not arguing that's the most likely outcome, but I wanted to remind everyone that a V-shaped recovery is certainly not out of the question given the current setup. Generally speaking, we know how tariffs work. It's not like the illness where nobody had a clue what was about to happen, and that was when the world basically froze. And from a credit perspective, it's not like 2008 either. So, a TLDW, I'm viewing this as a great opportunity to acquire, but as I've said, it's going to be quite volatile and the markets could remain depressed through this year if the tariffs stick where they are as the world adjusts to the new normal. Now, with that out of the way, the Federal Reserve balance sheet has gone from 8.9 trillion down to 6.7 trillion over the past 2 years. Liquidity is a primary driver of the markets and is one thing to always remember. Historically, balance sheet expansion via quantitative easing and tightening via quantitative tightening have had huge impacts on market performance, and you need to know that QT impacts usually lag the market. As you've heard me say, these impacts can take 6 to 12 months to be felt by the markets. As a refresher, the Fed does QE by buying assets from banks, think treasuries or mortgage-backed securities, to inject liquidity into the system so banks can lend more, the borrowing costs fall, businesses spend more, etc. But not only that, QE can drive down treasury yields, making bonds less attractive and driving investors into stocks. QT has the opposite effect. It pulls reserves out of the system, raising borrowing costs and increasing longer-term yields. Studies have been done showing a $1 trillion balance sheet change moves the 10-year yields by 25 to 50 basis points, and generally speaking, higher bond yields make stocks relatively less attractive. Now, just know this conversation obviously goes way deeper with types of reserves and reverse repo markets, but that's well beyond the scope of this video. So, is the Fed conspiring with the current administration to temporarily tank the stock market to roll over the $7 trillion in debt that comes due this year? First of all, I would say probably not, because the Fed started QT back in the summer of 2022 to fight inflation. Okay, but what if Trump is using tariffs to drive down stock prices, causing investors to flee to bonds, driving down interest rates so the government can roll over trillions in debt coming due this year? Does this make sense if you run the numbers? Again, sticking to high-level figures, let's say 7 trillion needs rolled over, some as T-bills and some as notes or bonds. The 10-year was up at 4.8% when Trump took office. Now it's around 4.2% after a rally today. But for sake of argument, let's say Trump can drive down the rate to 3.5%. And let's assume the T-bill rate stays around 4%. $4 trillion of T-bills and $3 trillion of 10 years at 4 and 3.5% respectively, compared to where rates were at when Trump took office, would be an interest savings of about $75 billion per year. And this would be somewhat of a best case scenario because the 10-year would have to drop to 3.5%. And further, if you want to find savings over 10 years, just remember T-bills roll over every 3 months and rates are always changing, but assuming they stayed the same for 10 years, that would be $750 billion in savings over a decade. Then if you discount that back at a 3% rate, that's a combined net present value of $640 billion saved. Again, if Trump was actually out here trying to drive down the stock market in order to drive down rates. But what people haven't been talking about is the cost of doing something like this. So if you assume the market's dropping 20% as an example, that wipes out about $10 trillion in household wealth. There have actually been Fed studies that have shown consumer spending drops by 0.5% for every 1% of wealth loss. And doing some math, that would mean the GDP could be cut by up to $420 billion in the first year. I got to that number because consumer spending is about 70% of GDP. In this case, it would be about $17.5 trillion in a $25 trillion economy for 2025. Then to calculate the wealth lost, that would be the $10 trillion wiped off the markets divided by household net worth, which sits around $150 trillion. That works out to 6.7% wealth lost. And again, if every 1% lost means a 0.4% reduction, that's about a 2.4% drop in spending. So if you multiply 17.5 trillion by 2.4%, that gives you the $420 billion in the drop to GDP. So ask yourself, would a $420 billion hit to GDP this year be worth it to save $75 billion in interest for this year? Well, with that framing, no, because wealth destruction hits voters a lot harder than government debt savings help. However, over 10 years, as more of the interest savings would be realized, things would likely balance out paired with an expected market recovery, and over 10 years, this Trump strategy could look quite brilliant. And listen, let me be clear, I'm really not trying to argue one side or the other. I do not have a dogmatic opinion on this. I'm just trying to put some numbers on all of the speculation that we've seen over the weekend to help us think through at a high level what might be going on here and how all of this will play out over the next few months. And yes, as I've said before, this is all a long-term play which may require short-term pain. But there's a lot more to the story, like the cost of unemployment or business cuts to spending or general overall sentiment. So in my opinion, the economic costs would outweigh any interest savings by far, even over the next few years. So for me, I think the market sell-off is just something that's happening, not necessarily by design, because Trump has made it clear the priority is Main Street, not Wall Street, and putting America first, and rectifying years of harmful tariff imbalances. I think the real and primary goal is playing hardball, to come out aggressive and as strong as possible and to not budge. And from there, to see which countries cave first and come to the table. People like Bill Ackman have suggested a 3-month pause for these tariffs, but to me, that would look very weak on Trump's part. And if any of you are poker players, that would basically give up your hand and be a huge tell that this whole thing was really just to negotiate. And that ultimately destroys your leverage. The main reason negotiations could favor America right now is because the rest of the world may actually be thinking that these tariffs are for real. Again, that's the only way this is going to work. There's also this narrative out there that Scott Bessent, our Treasury Secretary, is some sort of genius in the hedge fund world, and sure, he has decades of experience betting on economic trends like currencies and interest rates. And it's true, he was involved in one of the most famous trades ever, shorting the British pound back in the 90s. You know, fun things you learn in finance class. His team did make over $1 billion on this one trade by analyzing housing data to find a vulnerability in floating rate mortgages. However, people seem to be forgetting that Stan Druckenmiller and George Soros were really the key players of that team. It's not like Bessent lone wolfed that trade. And further, some public comments have us wondering how much Trump is really including him in these tariff negotiations, and Bessent himself has hinted that the market drop was more thanks to tech developments rather than the tariffs, which, in my opinion, is laughable. All that to say, I don't think he's some sort of savior here. However, I do think he's a good fit for the job and what we need right now. But at the crux of this whole situation, we have Trump saying today the US could go even further with tariffs on China China in response to China's 34% increase on us. And in this post, in my opinion, Trump gave away his tell by saying negotiations with other countries which have also requested meetings will begin taking place immediately. What this means is Trump is dropping the hammer on China because he knows China's economy is quite fragile with an aging population and a real estate crisis, and the goal all along has been to decouple the US from relying too heavily on China. And now is the time to use all of this leverage and find the pressure points for what other countries are ready and willing to play ball. If you missed Scott Bessent on Tucker, he talked about a recession happening in China a few different times. So if America corners China here and limits its exports, pressuring the yuan, it could cause a global flight to US treasuries, which would further drive down interest rates. And we just explained why that's so beneficial for us right now. And Elon spoke up a bit about these tariffs over the weekend, saying both Europe and the US should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America. Elon added he also hoped for a deeper partnership between the US and Europe and greater mobility for those wishing to work in either the US or Europe. He said that's certainly been my advice to the president. So to land this plane, because I could go on about all of this for the next 45 minutes, but right now there are already plenty of countries coming to the table to negotiate. I think the market sell-off is largely due to uncertainty that is not going to last forever. I would guess by the end of Q2 or into Q3, we have most of the clarity we need on tariffs and how it's going to be moving forward. I think hardball will be played for the next few weeks. The markets will be volatile, but the good news is banks have deleveraged themselves already, and once this uncertainty fades, there will be trillions of dollars of capital ready to re-enter the market. And yeah, there's this one company that's swiftly approaching rolling out world-changing technology that most analysts think is behind Waymo. But once they realize how mistaken they are, I guarantee you capital will flow into Tesla, and whenever it can start unlocking unsupervised for customers across the US over the next 12 months, which we know should be a big boost to adoption because that's when people will be able to play on their phones, etc. That's when things are going to become very exciting, and I just know for myself I'm not going to miss that move because of uncertainty right now. So we have some time ahead where fear wins the day, but I can see this storm clearing this year, paving the way for a perfect storm either later this year or into 2026. A perfect storm where the macro stage is set and the runway is cleared for Tesla to end years of financial and product stagnation, finally making its grand debut as a real-world AI company to the point where there is no longer room for debate.
Here are a few images and a couple of video clips. What this is the new Model Ys, and also I saw a Cybertruck are now driving unsupervised with no humans in them from the factory over to the outbound lot. And they're driving to the south along the west side of General Assembly, down to where the fork in the road is, going under the South Bridge, and then turning to the north and driving along that road that goes by the Cyber Tunnel, and then they queue up by the east side of the end of line. Once they are all there, then I saw that humans were then moving them into the end of line facility for the processing. So at least about 2 miles worth of driving is being done now without humans by both Model Ys and Cybertrucks here at Giga Texas.
To conclude, as I've been saying, we have to wait and see if these tariffs stick around, but one thing to keep in mind if they do, the energy storage sector in the US will likely be hit the hardest, as Chinese lithium batteries would face a 65% US import tariff, set to jump to 82% by 2026. And as we've learned over the years, it takes time to scale up production of battery cells, and LFP cells built in America would be no different. Shifting to the protest front, Amuse said that Soros-funded Indivisible is openly admitting they're behind the 1,300 paid protests. He said Democrat billionaires are funding these uprisings and they should be held legally accountable for the violence and vandalism, and Elon shared that saying they will be. Michael Guilfoy, who's the director of battery battery cell manufacturing at Tesla, on LinkedIn said that their cell manufacturing team in Texas reached a huge milestone at the end of 2024, becoming the lowest cost per kilowatt hour battery cell producer for Tesla. He said, "We aren't done yet. 2025 will have more big milestones with fully ramped dry battery electrode manufacturing to deliver even more cost efficiency." So yes, I take this to mean the 4680s are the lowest cost per kilowatt hour for Tesla before full-on DBE production for both electrodes. As we've touched on, this really is a huge milestone for a, air quotes, car company to be beating the world's leading battery suppliers. Now, of course, part of this achievement is that these other suppliers are charging Tesla a margin because they're not going to sell to Tesla at cost. But however you cut it, this is absolutely an excellent achievement for the Tesla 4680 team. With that said though, I would add there's a lot more to the story when it comes to having the overall best cell, because cost per kilowatt hour is just one metric. One other big metric we still have to learn about is the longevity of these cells. But in the short term, another metric that we do have some data on is the charging curve, which I think by most industry observers and Tesla owners would say has been somewhat of a disappointment so far. But as we've said all along, knowing Tesla, they will continue to iterate and improve these cells, and step one was always this milestone right here, the lowest cost per kilowatt hour in driving scale. Once they cracked that code, then it was going to be the game of putting the icing on the cake, if you will, and making the energy density and all of those other metrics even better. So I view this news as a green light that the next phase of the game has begun. On that note, if you look at the Cybertruck order page on the Tesla website, you will see that the range extender accessory has been completely removed. However, it is still listed on the spec sheet for both the Cyberbeast and the all-wheel drive variant. So this could be nothing. It could be Tesla removing this option altogether. It could be Tesla working on a new battery pack altogether, one with more range where you don't have to lose any vault space. Or it could have been taken down temporarily because the backlog for this accessory is already too long. For now, I don't really have a beat on this one way or another, but we'll watch going forward. On X, Lars said, "Let's make Teslas better. What do you all want for 2026? Going through the replies, Lars actually responded a few times. Sean Su requested, "How about the ambient lighting react to the currently playing music?" Lars said, "That sounds fun." Tesla Hype asked for the driver's side lumbar position being saved in profile settings. Lars said, "This seems doable. Lumbar is not an absolute sensor, so we're going to have to do some firmware magic on this. Back to the engineering whiteboard." Nick Patane said, "Model 3 track package." Lars said, "You and me, same page, but hey, let's just get together and do this one as a fun side project." Not really sure what that means. Someone asked about massage seats and CarPlay, and Lars said, "Everything is possible. Noted." Another asked for a retrofit signal stock for the new Model 3, to which Lars said, "We'll try." I shared my list over on X, but I would be curious if you could only pick one or two, what would you choose? Tesla Europe and Middle East posted a video saying FSD supervised in Europe pending regulatory approval. Ashok said FSD's end-to-end model continues to scale well to other regions, first China, now Europe. Now, unfortunately, we know how big of a hurdle those last three words are, pending regulatory approval, but it's good to see that testing is underway, and maybe this post is a sign that Tesla's confident about how things are going. In a future software update, Tesla plans to enable the vehicle to alert the driver whenever it detects an emergency vehicle, either through sirens or visually. This assuming the owner has given the vehicle permission to use the internal microphone. Through the software, Green the Only Found automatically detects and alerts the driver to nearby sirens, helping you or autopilot recognize and yield to approaching emergency vehicles. When a siren is detected, the media volume lowers and an alert appears on the display. Sound detection data stays within the car and is not saved or transmitted unless data sharing is enabled. We got some new updates about Tesla's planned ecological paradise at Giga Austin through some public filings. We're talking things like walking or running trails, bike trails, outdoor education, an event center, some sports courts as they've called out, and some wetlands, plus a community garden. They're talking about solar canopies for power, playgrounds and picnic spots, soccer fields, basketball courts, a waterfront marketplace. They plan on hosting regular exhibitions and events on sustainable living and innovation, establish protected natural habitats and wildlife corridors, and they do talk about public transit, saying they're encouraging car sharing and bike sharing programs. For numbers, 25 miles of new walking trails, 18 miles of new biking trails, and 16 barriers transformed into a connected network with public access and parking provided. It's actually a pretty detailed document, and it does seem like this will be pretty awesome when it's done, so I'll have this link below if you want to dive in. Elon said it will be awesome. And how about this? We finally get to hear from Drew Baglino as he has his own new startup, Heron Power, raising $50 million in a Series A round to develop next-generation transformers for electric grids. Heron plans to manufacture solid-state electrical transformers in the US. They said transformers adjust electricity voltage and are in short supply as grids face surging electricity demand from power-hungry AI data centers. A handful of startups are developing advanced transformers, including solid-state systems that replace conventional copper and iron components with more efficient and versatile semiconductors. Fun fact, right now, about 80% of high-voltage transformers are imported. 5 days ago, Elon said, as I said a few years ago, the AI scaling constraint will move from chips to voltage transformers to electricity generation. So best of luck to Drew and his Heron team. I'll definitely keep an eye out for updates, as it does sound like these transformers may be a bottleneck here around the corner. Clearly, Dan Ives was setting us up last week, as he has officially lowered his price target for Tesla from $550 down to $315, a 43% cut. His rationale: Elon created brand crisis and Trump's tariffs equals the perfect storm for Tesla. But as Alexandra lovingly shared this picture of Dan Ives standing with the one and only Ross Gerber. And now we know one potential root cause for why Dan's operating system has been compromised. All jokes aside though, the way this plays out, once all of this uncertainty clears up, Ives will go back to being an Uber bull and act like this little time period never happened. Just like most of the other Wall Street analysts, they're just following the winds a few days late. Toyota's now saying it aims to have about 15 electric vehicle models developed on its own by 2027 and is targeting production of about 1 million cars a year by then. But honestly, I'm pretty fatigued of hearing all of these other companies talk about all of their plans and promises when most of them never come to fruition. So for now, I'll say we'll see. Tesla stock had yet another very volatile day. At one point in early trading, it was down to $214 a share, and then shortly thereafter, it spiked up as high as $251 a share, closing the day back down at $233.29, down 2.56%, while the NDX ended up 0.19%. It was another higher volume day, trading 35% above the average. The average itself keeps ticking up. Hope you guys have a wonderful day. Please like the video if you did. You can find me on X, linked below. And a huge thank you to all of my Patreon supporters.